Good morning. It is Thursday, February 19th, 2026. This is your daily global briefing. I am Cora for today, delivering a deep dive analysis of the pivotal events that have defined the last 24 hours. We begin our broadcast on the world stage, where a significant religious and cultural milestone has arrived amid a complex geopolitical backdrop. Ramadan has officially commenced for millions around the globe, with various national authorities, including the Indonesian Ministry of Religious Affairs, declaring today as the first day of fasting. This sacred month begins during a period of intense diplomatic activity, particularly in the Middle East, where a shaky ceasefire in Gaza continues to hold. However, the festive spirit remains subdued as Palestinians navigate the challenges of displacement and the slow arrival of humanitarian aid. Simultaneously in Eastern Europe, the diplomatic stalemate between Moscow and Kyiv persists. The latest round of United States brokered talks concluded late yesterday without a breakthrough, even as Hungary announced a suspension of diesel shipments to Ukraine due to continued interruptions in Russian oil supply lines.
Transitioning from the world of diplomacy to the broader global economy, the narrative is being driven by a historic surge in the World Uncertainty Index. New data released today shows the index has reached its highest level in 30 years, surpassing the peak seen during the 2008 financial crisis and the height of the pandemic. This unprecedented reading reflects overlapping instabilities in trade policy, institutional credibility, and regional conflicts. Despite this high level of structural volatility, the United Nations maintains a global growth projection of just 2.7% for 2026, a figure that remains below pre-pandemic averages. This fragile expansion is further complicated by the diverging paths of advanced and emerging economies, as the former grapple with tariff-induced inflation while the latter struggle to access the capital necessary for large-scale development.
In the realm of finance, all eyes are on the Federal Reserve as investors digest the minutes from the most recent policy meeting released late yesterday. The records reveal a cautious central board that is committed to maintaining steady interest rates until inflation consistently aligns with the 2% target. This hawkish tone caused a brief spike in the 10-year Treasury yield, though the broader equity markets showed resilience. In a notable private sector development, NVIDIA led a recovery in technology stocks following the announcement of a multi-year strategic partnership with Meta Platforms. This deal, reportedly worth tens of billions of dollars, focuses on the massive build-out of data centers optimized for artificial intelligence training and inference. Meanwhile, the commodities market is seeing a flight to quality, with gold prices surging past $5,500 per ounce as investors seek a hedge against the record-high global uncertainty.
Turning our attention to the technology sector, the focus has shifted toward bridging the widening digital divide. At the India AI Impact Summit yesterday, Microsoft announced a landmark commitment to invest $50 billion by the end of the decade to expand artificial intelligence access across the global south. This initiative is designed to prevent a new era of economic disparity, as current data suggests AI adoption in the global north is twice that of developing regions. Simultaneously, the race for critical minerals is intensifying, with Indonesia tightening its control over nickel exports as the United States and China scramble to secure materials essential for the next generation of semiconductors and green energy infrastructure. This strategic maneuvering underscores the growing reality that access to hardware and training data has become the primary currency of competitive advantage in the modern era.
Finally, we look at the logistics and supply chain networks that serve as the vital arteries of global commerce. The industry is currently managing the implications of what many are calling the most aggressive run of tariff activity since World War II. New research indicates that 90% of the economic burden from recent trade duties has fallen on domestic companies and consumers rather than foreign entities. To mitigate these rising costs and the continued volatility in the Red Sea, major automotive manufacturers like Audi are scaling up the use of artificial intelligence to streamline their production and logistics value chains. Looking ahead, the focus of the retail sector is on Walmart, which is scheduled to report its quarterly earnings later today. As the company recently crossed the $1 trillion market capitalization threshold, its results will serve as a definitive report card for the resilience of the global consumer in this high uncertainty environment. That concludes our global briefing for today. Thank you for joining us.